Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Let me start with some tweets that I've been reading from Raul GMI. Well worth following and extremely incisive in point of fact. And he says, we're at the most important juncture in FX markets in my entire 30-year career. The dollar appears at risk of an uncontrolled rise. Let me show you. Have a look at his Twitter feed because he's got a very interesting thesis. And he says the big disturbance in the matrix is the Chinese yuan, which conceivably could go to new all-time lows, highs on the chart, versus the dollar. Over the weekend, I said the most important currency to watch right now is the Chinese yuan. And I was writing on Sunday to be published on Monday, and I'd said it could slice through 7 like a hot knife through butter. And we're currently at around 706.80. China's hand is stronger than Trump thinks, is an article in Markets. US President Trump seems to think he holds the stronger hand in any currency war with China. Don't bet on it. The yuan is under siege, thousands of companies are abandoning the country, and massive amounts of money are pouring from China into the US, the president wrote in a Twitter post over the past few days. The suggestion is that Beijing's hands are tied by the risk of capital flight. China's last attempt to stem capital outflows was disastrous. Between 2015 and 2016, Beijing spent about $800 billion, or 20% of its foreign exchange reserves, to stabilize the currency. In 2015, a main channel for capital to exit China was currency arbitrage. The offshore yuan traded at much weaker levels than the onshore currency because of the absence of daily trading restrictions. Banks and state-owned enterprises with offshore accounts could earn easy money by simply selling the yuan in mainland China and buying the currency more cheaply in Hong Kong. Now, on Thursday, China set its yuan fixing weaker than 7 for the first time since 2008. While the headlines may suggest that the government is weaponizing the currency, the reality is that Beijing has been very gentle. China still wants a trade deal and is extending an olive branch. Trump would be wise to realize that before patience runs out in Beijing. And I agree with that. I think the yuan has the US stock market by the short and curlies, as it were. And I wonder if Trump and Mnuchin have appreciated this Sun Tzu level move. And the point has been made with a lot of finesse and etiquette. And essentially what I'm saying is if they weaken the currency, they're showing that there is a direct correlation with the US stock market. And therefore I also tweeted to POTUS, I think I would tread very carefully now. Sun Chartist has various predictions for the quarter 4 forecast, clustering around 690. And I think that's unlikely. The Fed broad trade weighted dollar index is incredibly close to breaking the enormous cup and handle pattern at 130, barely 0.5% away. That's Raul. And over the weekend, I said, President Trump keeps talking about weakening the dollar. I find it curious that such a stable genius has yet to calculate that a strong dollar is infinitely better. And if he is serious about his warfare strategy, He needs to add currency warfare to his tariff, sanction, and linguistic warfare arsenal. My perspective about the dollar is this, and note well it's just a fraction under its 2019 high, even after a rate cut, is that there is very little President Trump can do. In fact, the risk is that when the market sees he is powerless, the dollar might lift off like the proverbial parabola. 24th of June, I was writing about the bond markets and I characterized it as a Wizard of Oz world. And to wit, have a look at this tweet from the bond freak. Wow, he says. And that confirms what I wrote on the 3rd of June when I said bond yields are in tilt mode.